Hi, my name is Mark Bernard. I'm a monetary economist. I'm going to tell you, I'm out. What do I mean by I'm out? I'm totally out. I liquidated all my assets, all my stock market assets, and everything's in a money market mutual fund right now. I'm going to talk about that later, but in this video, I want to talk about why Russian economy is on the verge of breakdown. I know everybody's using the word collapse, but I'm going to back it up by economic theory, things that you haven't heard before. I'm going to give you 4 possible scenarios for a Russian economic collapse and back each one up with a corresponding theory. And first, I'm going to start this segment with explaining Karl Marx. What does Karl Marx have to do with Russia today? Everything. Karl Marx, the psychogenesis of Marx's economic logic and thinking comes from his childhood. And without getting into great detail, you can read a biography of Marx. He was Jewish and he felt alienated. He was also baptized as a Christian and he was even alienated within the Jewish community. He had double alienation. He subverted this psychologically and it bubbled up manifest in his economic theory of alienation. Years later, this is the way the human mind works. His theory had many problems, not to mention the labor theory of value, which is not the scope of this economic idea here. It's to report on Russia and why they're going to collapse. But my point is, whenever you have somebody running an economic system, whether through a command and control economy or whistles and bells and controls, a lot of it has to do with the psychogenesis of their early upbringing. And the Tsar of Russia, if you look back, not at his biographies and what he wants you to know, but is true what people say about him in the peripheral, if they can even speak about it. He was all about control and power, okay? And that is projected into his economy. It's almost like a projection. This nation state he's trying to create, this empire, is a projection of his psychology. Command and control, control and dominance, either you're the top dog or you're the not. And that has tremendous inherent weaknesses in an economic system. So let's go down these 4 scenarios of why I think the Russian economy will collapse. Initially, I made a claim about it almost a year ago that I had a chart projecting out the probability each quarter of the Russian economy collapsing. My initial claim was in 2026, by the end of it, kind of corresponds to the last collapse of Russia, I believe in 91, in the 90s, the Russian economy would almost have 100% collapse. But each increment as you step back, it gets less and less. I think that chart was pretty valid because I made some models and econometric regressions on it. But there's just too many exogenous variables in an economic model to just assume ceteris paribus. And in the last, I'd say 4 months, I revised my projection that would probably go on the brink of collapse a lot earlier. And my earliest claim is starting June 30th, 2025, you're going to start to see some wobbling in the economy. Now, a lot of YouTubers are claiming, I'd say about a month or 2 back when the ruble was going down and the stock market was going down, they were claiming that this was the end. And, I'm with them, okay? But what a YouTuber says or what a YouTuber doesn't say doesn't mean it's going to happen. It's not how the history unfolds. It always unfolds based on solid economic theory. So that's why I'm going to break it down into these categories. And right now, the dialogue on YouTube is shifting to other things like Europe rising to the occasion and the geopolitics around in the States, etc. But I'm going to remind you that everything's still in play for a Russian catastrophic breakdown of their economy. The 4 scenarios are a gradual breakdown and decline and a decay. Scenario number 1, based on old school Keynesian theory. Scenario number 2 is a deep recession. The first scenario has high probability. The second scenario has the highest probability as a deep, severe recession based on the old school Stockholm school, old school, Vixel. He had not only did he have a theory of monetary theory, he had a theory of business cycles. Scenario number 3, a financial crisis, economic breakdown based on disequilibrium in the money market, which creates wave effects in the real sector. Latter Austrian theory, mid-century Austrian theory, School of Economics. And the last is a total meltdown. That has probably the least probability. I'd put it now this year, maybe 25%. I'd put the Austrian at maybe 50. I put the old school Stockholm, probably 80% plus. And the old school Keynesian, probably maybe let's say 70 or under 70%. So those are the 4 scenarios, and let's see how they all play out. Oh, in the last scenario, total collapse, we can say that's Milton Friedman, quantity theory of money. Just keep it simple. I know there's a lot of new Keynesian, new consensus schools, but they're more econometrically oriented, and I'd rather go back to the actual theory. So let's take a look. And so I'm going to back it up with, first thing is microeconomic agents in Russia. This is for the slow, gradual decay. The Russian, their war chest is gone. It's pretty much gone or it's gone. So they're going to have to rely on cannibalizing, yes, I used the word cannibalizing their economy. Actually, in the Battle of Leningrad, right around the Tsar's time or father's time, that's what they resorted to. So why is this going on? What is going to happen? Since they can't raise debt in the foreign markets, and since they certainly, the tax revenue is going down because business is going down, and they're lifting themselves up by their own bootstraps in the Y plus C plus I plus G plus NX equation, identity, rather. The G is really pulling the economy going along. They're out of money. There's this mythology that the Russian economy is infinite resources. Russia big, Russia strong. And that is the total mythology. And a lot of even YouTubers, even pro-Ukrainian YouTubers, sometimes swallow that. They have very finite resources. They're teetering on thin ice right now. So here's the Keynesian idea. They have a monthly income of $618. Wow, that's gone up since I started this from the 450, 500 something, $618 per month. That's the average Russian. And that's based on 23,801 user input data in the last 12 months. So I think we have fairly good confidence about that data, unless they've tried to game the system. You say, okay, everything's cheap in Russia. The average apartment cost outside the city center, not where I live, like here, $503. Okay, then you got to pay $25.91 for an inner city tram or bus pass to get in. Okay, and then utilities, you call them media, phone or internet, heating, gas, electricity. That's topping over now 118. So that already puts you in a negative cash flow and disposable income. You're done. Okay, you're already taking, payday loan type things in Russia. They don't have a great access to credit cards like we do and easy consumer loans. Not to mention food. I mean, it's like $7.38 for some just basic need per kilo, $8.64 for a kilo of basic cheese. Okay, so you're done. You're in the hole each month. I would say what I've calculated based on user input data, you're in the hole maybe $400 a month, easy. And what if your car breaks down? What do you have medical problems? You can say, oh, they have free medical. No, I've been to Russian hospitals. They don't have jack. The only way you can get clean, good medicine is you have to pay for it. So the average Russian is in major, deep, we'll say, doo-doo. Okay. It's true. And, not to mention the pensioners, they may get $200-300 a month. Maybe if you're in Moscow, you get more, sell your soul for a golden fiddle or whatever. I would recommend the Russians read Goethe. Of course, they skip the Enlightenment. So the Faust, obviously. You guys know it. I'll tell real quick. He sold his, he had everything in the world. It's like an oligarch in Russia. He sold his soul to the devil to find one moment of pure contentment. And that came in the selfless act of doing good to others. Okay. So the Russians, from a Keynesian perspective, Keynes believed in these animal spirits, consumer confidence, and what the average consumer did and can live, and how they go about their day. Right now, they may have a little bit of euphoria as manifest in the stock market or the ruble, but that is over. That game is over. That's why they're slowly cannibalizing their economy in various ways. And the Russian government can make some bread and circus payments, but they can't sustain this for the long term. And it looks like they're going down a slippery slope they can't crawl out of. That will perpetuate itself with hoarding of money, and that will further perpetuate itself with the Keynesian collapse. Let's go to scenario 2, which I called old school Stockholm Vixelian economics. Vixel was known for his natural rate of interest. I'll touch that into the Austrian school. But the Vixelian Vixel was basically all about productivity. He was about business cycles and fluctuations were caused by real factors like productivity. The Russian productivity is horrible. I mean, here in Poland, people are super productive. They're super smart. They have breakout groups. They have these hubs. They're thinking, employing technology. It just really rocks here. In the society, we all get rich. Everybody's rewarded. The government has more money. The people have more money. Productivity is increasing leaps and bounds. I don't even think it had the recession in 2008. I think it just continued to sail right up. You compare that to Russia, everybody's, just keeping their heads down. We are little people. I think it's called Maui Człowiek. They're just doing enough to get by. My goodness, that's like anti-productivity. Every single independent indicator, not indicated by the Russian government, every single independent indicator in Russia is showing massive productivity losses in the private sector. Doesn't matter in the public sector. Okay? Public sector doesn't mean jack. Public sector doesn't create anything. So based on the Vixelian shift in productivity, and you read Vixel's later works, 1925, he was all about productivity, David Davidson, etc. That Russian economy should be having a substantial, deep recession based on declining productivity because all the lifeblood through draconian measures are being sucked from the private sector to the government sector. And it's all going into unproductive assets, like the broken window fallacy. You break a window so somebody can repair it and they'll have money in their pockets and they multiply it by spending it at the restaurant and then the waitress spends it on, a new dress or something, or waiter, the waiter spends it on a new dress. Okay. So the probability of that is still very high. Notice I'm not talking in generalities. Notice I'm just not a YouTuber just talking, I think it might happen. I think it might happen next year. No, this is rock solid theory based on productivity indexes calculated independently. And similarly, I substantiate it. Go to Numbeo. Okay, Numbeo has user input data, over 23,000 user input. That's pretty valid data of individual consumers now having negative disposable income. Number 3, you all saw The Big Short, financial meltdown. Everybody's looking for something toxic in the Russian economy. What is toxic? We had mortgage-backed securities. Are you telling me the Russian economy doesn't have a toxic asset in it? The whole thing's toxic. Let's get back to interest rate theory. This is the Austrian school of economics. The natural rate of interest is the marginal productivity, or better defined as the profitability on newly created mobile capital. That has to match the bank rate of interest. Right now, the bank rate of interest is 21% in Russia. However, you add on, that's nobody gets 21%. It's really like 28%. So the only people who's making 28% profit in any business in the whole world, not even casinos and the bad stuff on the internet make that rate of profit, right? So private investment, the capital structure has been distorted. The intertemporal lengthening of this capital is now collapsing. And I've explained that process. On a private sector, it takes time to collapse. Robinson Crusoe, when you're first on an island, you cup your hands and drink water. But if you know you're going to be here longer, you maybe build a trough and a pulley system. And that system is collapsing everything in Russia when investment is a disequilibrium in the money market because of divergence of the monetary rate of interest, okay, and the natural rate of interest. It's 100% true, factual, you can't get around it. It creates systemic effects through all the economy because money is the second half of every transaction. When I buy this sweater I'm wearing, I bought it at Reserve, the nice Polish store. What do I pay? I pay money. I'm bartering something for something. Every transaction you have, whether it's even in crypto or dollars or zloty or euro or ruble, ruble, I'll be burning some more of that lately. It's the second half of every transaction. So when the monetary market is disrupted, even though they hide it, artificially propping the ruble, it's going to have a systemic effect in the real economy that's going to sink back into this rising prices, and wages lag behind price rises. That is classic Keynesian theory. It's almost a stickiness of wages. Look up sticky wages. Even Michael Woodford and the new Keynesian and new consensus still have the stickiness of wages in there. So when Russian prices rise, wages are lagging. Disposable income at this point in time, already in late winter, early spring, are already negative. Disposable income officially is in negative. Now, when the government sector goes in negative because they've expended all their war chest, okay, all their reserves, and they're being chipped away through sanctions at the stream of income through oil. And the last I see, there's a lot of volatility in the oil market. Okay, if it sinks down lower, you're gonna dribble away at that. They're gonna, again, they're bread and circuses that are artificially supporting the housing market and the day-to-day prices or the wages. That's going to be cannibalized. Okay, now, so I've given you three probable scenarios. The Vixelian or the old school Stockholm school theory is the most probable, real shifts in productivity and real cycle shocks. But the Austrian is very probable, as well as the Keynesian. The fourth, the total collapse that we'd all like to see, and every YouTuber out there is talking about, is the quantity theory of money. Just simply, they can't go to the credit markets because they simply can't. Nobody's going to hold a Russian bond. Nobody's going to hold Russian ruble. Everybody's fleeing from that. The oligarchs, number one thing they hold are dollars. Number two are euros. Number three are Great British pound. Okay? They're definitely not holding ruble. So if you can't fund it that way, you're going to have to fund it through taxes. But if your productivity of the private sector, of the I sector, is down, they can't fund it. So they're going to have to be, yard sales all over the place from the government. I don't know where it's going to come from. They don't even have, they're claiming wage shortages, labor shortages, but we know that labor shortage is just a code word for they don't have any money because there's never a labor shortage. I mean, so you can't hire enough workers? Pay them $1 million a day. You'll see all the workers in the world come there. Okay, so you guys got to put it into perspective that wages are just a price. And if the price is out of equilibrium and there's a shortage of workers, that's really saying the government of Russia is out of money. Okay, it will trickle through. They can't even find bus drivers. They still can't find bus drivers. So this collapse coming from a Milton Friedman scenario, it could happen because there'll be, quantitative easing until the cows come home. They'll just be printing and they won't mention it. Elvira, the central bank, she's pretty, tight-lipped. She doesn't want to be by any kind of balconies or anything. So this is still a very plausible scenario, and that will only send more shockwaves, monetary shockwaves, through the into the real sector. And that could cause a 1990s collapse. I mean, the Russian economy collapsed 1991, I'd say, but they collapsed again in the 95, 96. It just kept on collapsing. Argentina, these things really happen. And my premise is the weather looks great. It's almost like the economies are like weather. It looks great until there's, Florida weather or some place where it has catastrophic weather. It's great until it isn't. Okay. The bridge is safe until the structure is, and then the bridge collapses. Everything looks fine. Nothing to see here until the economy collapses. So people were making investments, funds were taking money in 2008, right before the crisis. People were getting huge bonuses seconds before the collapse. Nobody saw it coming. I'm telling you, okay? It's coming. I'll give you 4 reasons why it's coming. So why did I take my money out of the U.S. stock market? Okay, don't do what I do. I mean, I'm the guy who stuck his finger in a blender making czerwona kapusta, right? Okay, so I make a lot of mistakes. Don't listen to me. Okay, I'm not giving you advice. The reason I did it is volatility is the kiss of death for any financial market. And right now, our fearless leader is creating tremendous gyrations in all financial markets. And the purpose of investing is what? Capital preservation and conservative growth. I took out my kids' college fund, my IRAs, everything is in a money market. I'm happy with 2.6, 2.7% return for the next 6 months or 3 months until things settle down. Because if you have a 50% decline in the market, it takes 100% increase to recover that. Sometimes it takes 10 years. That's a lot of opportunity costs lost. Okay, that's number reason 1. If the guy in the big wig, who he thinks he's a big wig, but he's not, just remember John, I believe 19 in the Bible, you don't have any power except from that comes from above. If he thinks he holds all the cards, he's expressing himself in gambling terms. I'm out of there because I don't roll dice with my money. I'm conservative. As I gradually get back in, I'm going to be picking very ethical stocks and ethical places. Maybe a Norwegian fish farm, right? Maybe a Norwegian fish farm. Something safe. Maybe some investments here. Maybe things in the States that make the world a better place. Very defensive and very cautious because volatility is the kiss of death. So again, going back to this, the world is geopolitically volatile. This only sends shockwaves through this, interrelated system. All markets are connected. Adam Smith, David Ricardo, and no man is an island. You know where that quote comes from. And so that is also affecting the big bad czar of Russia because, the Chinese economy goes down because the U.S. economy goes down. They're not demanding the oil. The Indian economy goes down because they're not demanding the oil. That drains the revenue. It's all interconnected. It's not going to end well. The guy's all about, like I said at the beginning, look at Karl Marx and the psychogenesis of his economic theory. Look at the Tsar of Russia and the psychogenesis of his general worldview and understand where it comes from. And that is his weakness. That's his Achilles heel. And that's what is around the corner. In this year, the Russian economy is going down. That's my claim, and I'm sticking to it. Now, if there's sanctions relief, if the U.S. starts, delivering sanctions from, even weapons to Russia, everything's not ceteris paribus anymore. But that doesn't mean it's still not going to happen. Okay? We never can predict the future. I was in the future the other day. I had a time machine, and I saw they took his time machine away that he created. The guy who's going to create the spaceship to Mars. They took it away because he was trying to give sanctions relief to dictators of the past. That's another story. But hold on. Russia's going down. Light wins over darkness. And the economics of Russia is dark, and the future of Ukraine and the rest of the world is bright. My name is Mark Biernat. I'm a monetary economist. Have a great day. Thank you very much.